Welcome to Comply on the Fly with M3 and Karen B, your trusted resource for quick, reliable insights into employee benefits compliance. Each episode delivers clear answers to common compliance questions. Whether you're tuning in for the first time or you're a seasoned listener, we're here every other week to make navigating compliance a little easier. Please note this podcast and the contents herein do not constitute legal advice. In all cases, employers should consult with their own legal counsel. Let's dive in.
Hello, everyone. I'm Karen B. And the Comply on the Fly topic for today is ACA Shared Responsibility Penalty Letters. Oh, yes, everyone's favorite topic and the proof that all of the work you're doing to identify full-time employees properly, make affordable offers of coverage, and complete that pesky 1094, 1095C reporting every year really does matter. The IRS started sending out penalty letters in 2018 for the 2015 calendar year. Since that time, they have historically been 3 years behind in assessing the penalties. However, this year, 2026, we are now seeing them make some gains on real time as the 2024 calendar year penalty letters are popping up. So we thought it was timely to provide you with some tips on how to handle a penalty letter if you should be so lucky to receive one. First, a little explanation of the process is in order. Based on your 1094, 1085C reporting for any given year, the IRS will issue a letter 226J to you if it has determined that for at least 1 month in the reporting year, one or more of your full-time employees was enrolled in a marketplace plan and received a subsidy. Because remember, subsidies trigger penalties. This letter will include a summary of the penalties owed for each month in the year and which penalty is applied, A or B, Form 14764, which is your response form, Form 14765, which provides the full-time employees that received a subsidy and were enrolled in marketplace coverage by month, and a description of what steps you should take based on whether you agree or disagree with the penalties. Your response is required and will be due by the date listed on the letter. There will also be IRS contact information. Second, other than follow the response process, what should you look for? Review the summary table. If you received a very large penalty, it is most likely because you did not attest to the fact that you offered coverage to at least 95% of your full-time employees by marking your 1094C properly. This will be shown in a column A of that summary table. If you see a no in that column, then the IRS is assessing that very large sledgehammer penalty against you. If just one person enrolls in marketplace coverage and receives a subsidy, you get a penalty on all your full-time employees, minus the first 30. If that is what you see, you will have to communicate to the IRS when you respond that you answered that question incorrectly. M3 has a simple template letter you could use for that communication. The other review item would be Form 14765. This form lists those employees that received a subsidy in each month of the year and the coding you used on the 1095C for that particular employee. Take a look at the coding and make sure it's correct. Many times we see listings that include a code on line 14, but no code on line 16. Please note that if you leave line 16 blank, you will be receiving a penalty. You must include a code on line 16 unless you are admitting that you did not offer affordable coverage when required. You can make corrections directly on Form 14765 and include it with your response back to the IRS. There is no need at this point to go back and correct the actual 1094 or 1095C forms. Once you have done your review of these items, complete your response form 14764. Make sure you respond. If you don't respond, you will be assessed the listed amount and a notice and demand for payment issued by the IRS. One final tip. Sometimes letters from the IRS will end up in a department that is not aware of the ACA shared responsibility requirements. For bigger organizations, you may want to make those departments of your business aware of these letters and that they should be passed along to your internal ACA experts. And that is your Comply on the Fly topic for today. Thanks for tuning in.
For more employee benefits compliance insights from Karen B. and her team, please visit m3ins.com.